All right, guys. How you doing? I know it's been a while since I made a video, but I'm out here in Mexico. One of the reasons I actually started trading, it wasn't just to make a bunch of money, that was part of it, but what it really was about, and probably most of you, new traders probably have the same goal, but it was about freedom and being able to travel the world, make money from anywhere in the world. That's what I think a lot of people love about trading. You know what I mean? Being able to escape the 9 to 5, and just make money, from anywhere in the globe. And you can't do that unless you are able to, make money, Wi-Fi money. There's a lot of other things you could do, obviously, to make money remotely. But for me, it was trading. That was the way that I would be able to escape the rat race, escape the 9 to 5, be able to travel the world, do whatever I want, and continue to make money from my computer. Fast forward over 5 years, and now I'm living out that dream, doing exactly what I wanted to do. Right here, actually in Mexico at the time, as you can see. And I'm staying here as long as I want. I don't necessarily have to leave. I didn't have to wake up and go to work this morning, and I've been here for a while and I love it. It's great. So I want to help other people get exactly to this point, and I don't want people to take 5 years to necessarily do it. You can cut down that learning curve. I didn't have that, but with someone like myself, it is very possible to achieve that in a much shorter time than it took myself. I didn't have someone to really take my hand and show me everything that I needed to do in order to, learn everything and be profitable, in that first year or two. But trading is very simple. It is possible to be profitable in the first year if you really have someone that's gonna not just teach you the ins and outs of technical analysis, but how to have the right mindset. Because profitable traders not only just have fundamental analysis and technical analysis, they understand psychology and they know themselves, and that's the biggest thing that I would like to help you guys out with. But like I said, yeah, I'm glad it's a new year. So now that the holidays are over and everything, the market's picking back up. And last week was a really good week. I took some time off after the holidays, leading a couple days before Christmas, but I got right back into it. And a lot of you might know me as a forex trader, but I actually first ever started trading was options. When I was working back at Bank of America, the first thing I ever learned was how to trade options. And it wasn't until later in life where I actually drifted towards Forex. But now, after I always knew one point I would end up getting back into trading stocks, trading options, and everything like that. And once I felt comfortable enough with myself that I could, manage doing both, is when I decided to get back in to trading options. And now these days, I do trade on Thinkorswim with Charles Schwab. So I do like trading regulated on a regulated broker. That is one of the things that I do love about trading options as opposed to trading Forex. Now, don't get me wrong, I do love Forex. I love the way markets move and price action and things like that. But when it comes to actual brokers and trading on regulated brokers, stocks and options were one of the things that I really liked. You know what I mean? And I don't really want to, talk down about anything forex wise because I love forex, and I still trade it. I've had a lot of success with a lot of different prop firms in the past, but right now I've been looking just to get more diverse, and that I've been trading. I've been focused on my regulated accounts with Charles Schwab using Thinkorswim. Now, there's other brokers that out there that are also regulated that you could use, but this is just the one that I like personally because it fits my trading style, and I really like the software that goes into it. And it's just something that I've used over the years and I'm most comfortable with. But with that said, the whole reason of me making this video was just to show you guys pretty much how I was able to go ahead and make $60,000 last week trading stock options. Now, it's okay if you're not making that amount. You all have to start somewhere. But like I said, it's going to be almost 6 years for me. So it's definitely been a lot of trading and experience to get to this point. But nonetheless, whatever account size you're working with, you're able to be profitable simply following these basic steps that I'm about to show you. And one thing I know about stocks, going from, trading Forex for so many years and to, focusing on options is the markets move just the same. Any strategy that I learned trading Forex and currencies and things, I can still use actually to trade options. And that's one thing I love about trading. You can always, it's a very transferable skill that you can use to trade all different markets. Just it's just understanding the securities and knowing what you're getting yourself into. And risk management is always going to be key, whether you're trading options, whether you're trading Forex, you're always going to have to understand risk management and be disciplined. I don't care what you're trading, you always have to be disciplined. You always have to have risk management. So those are one of the things that, can also be acquired. That's also an acquired skill. But yeah, let's just go ahead and get into it. I'm gonna go ahead and share my screen with you guys so that you can see exactly what I'm talking about. Mm. Okay, so let's go ahead and make this full screen just so I can show you guys, my chart. All right, now now that you guys are looking at my screen, basically I've only been focusing on a few different stocks here, because one thing about options trading is, you don't need to do a whole lot. You can make a lot of money off of simply focusing on 1 to 3 different stocks, and you don't want to be a master of everything. You kind of want to be able to just focus on, I'd say, 1 to 3 different options. That's so you know them like the back of your hand. Just like in Forex, maybe starting out with a couple of pairs, same thing with options. I only focus on maybe 1 to 3 options that I like to trade on any given week. Now, I might change those three throughout the year or throughout the month, but at any given time, I'm still only focusing on 1 to 3 securities at a time. Now, so just to give you guys an idea of the ones that I've been focusing on, Nvidia is a very popular stock at the moment. A lot of traders are currently trading Nvidia for one reason, and that's because one, it's a hot stock. With all the AI and things like that, and the business that they're doing, they pretty much have a firm grip on the market, which is why their market cap is so high. So there's been a lot of volume pushing this stock. And as we know, we love volume. More volume gives an opportunity for us to go ahead and make more money. And basically just take advantage of those big moves. So if you see here, the market for Nvidia has been very bullish. But nonetheless, it has been ups and downs. It has ups and downs, which is okay. We were able to realize that and pretty much make money on whatever direction that this stock might be going. Um, but as we can see here, Nvidia, the past few weeks has been bearish. And ever since the price topped out at 152. Now, just to give you an idea, um, after you've been trading for so many years, you start to see seasonalities, right? And from my time working at Bank of America, I understand, what portfolio managers do at the end of the year. A lot of companies, a lot of broker dealers and asset managers, they like to dump a lot of losers, or they like to rebalance portfolios, so you know what I mean, and buy back more shares of stocks that are that are winning. So that is a high or chance at the end of the year before tax season and everything. It's a higher chance for a lot of asset managers to simply take profit and rebalance portfolios, cut losers, buy more winners, whatever. But in any case, what that really means is there's a higher probability that your stock share, whatever that's been bullish for so long, is going to go ahead and have a correction, right? So I always go into the end of the year knowing this. So that's kind of my edge. I'm understanding I'm not trying to buy the highs. I'm already going into the market towards the end of the year looking for it to be bearish. So that's the first key. That was the first step of me going ahead and going short on the market. Although I did in that early December, I did make a lot of money just going long, because I knew, okay, we're still riding this wave. But as it began to get closer and closer to end of December, I start to change my thinking, knowing what's ahead. So that's just a fundamental, skill set that you have to know. Just knowing the seasonalities is something you'll pick up years in trading in the market and really understanding how it moves throughout the year. But like I said, with going in with that mindset, I was just simply waiting for the market to flip bearish. And once I saw that, um, you know, here on Nvidia, you couldn't really, I don't really know anyone that would maybe be able to predict this move here, right? If you are, then you're probably working for Citibank or something like that. But for anyone to catch this big move here, as you can see, there's really nothing telling us that the market's going to reverse. There's not a whole lot that it's given us in terms of a reversal here. Besides the fact that you are like me going in understanding that it's probably going to start changing. Now, I thought that it would have happened a lot sooner, maybe before January 1st. Um, but as you can see, that wasn't the case. It may have looked like it around here, but the market continued to go bullish and give us a 154 and pretty much give us an all-time high on Nvidia. And what happened once market gave us that all-time high? Once we got over that 153 threshold, something you also should know is once markets make all-time highs, you know, I don't want to say 90% or something like that without giving you real data, but more than likely, after you get an all-time high, you're going to see a correction. So this is second, right? So first we have the seasonality, right? Being our first clue. And second, we have um, just a new all-time high, right? So new all-time high. So now we have two confluences to pretty much go ahead and go short, that the market's going to be going short. So once this was hit, um, that would be only indicated that you're going to be going bearish here at this moment. So once you see this happen, market kind of break this structure point, because the market was making a higher highs and higher lows. Once this structure point, this last higher low was broken, we're now bearish. As you can see, you know, the market has went ahead and retraced a fairly decent amount. But this is great. Now we know we're in bearish territory. Now at this point, like I said, once we reach below here, I'm looking for shorts. And this is where we can go ahead and start really looking for opportunities, right? And the way that I like to basically approach the markets is I like looking for inefficiencies, right? So as you can see here, the market did leave this gap here when it forcibly went down with a lot of pressure. So a lot of sellers are in place, a lot of sell orders being trapped in here. And as we know, the market does have to rebalance itself. Um, so once we go ahead and see this here gap, sorry, we do have this here in balance. I do like to play within these imbalances, because this is how we basically, find out where the market's going to go. Because we do know for every seller there needs to be a buyer, so there will need to be buys within this zone. As we can see here, when the market does come back into this 50%, that's kind of an optimal point for me. I do like to see the market come back into at least 50%. If it feels more than 50%, then I don't like that. But I do like seeing it stay around that 50% threshold, which actually gets very close in here. So this would right here, Wednesday, um, about 30 minutes after market open, 10 a.m. Eastern time. This is your optimal entry right here, right? Because not always will we enter in right when the market opens, but it's not just about timing the market, but actually, the position, right? So if we go ahead and drop this down, let's see. If we were to get in here, if we were to go ahead and short the market here, and let's say our stop loss is there. Let me go ahead and drop down to about a 15-minute. So this is where I actually got in on Wednesday. Right. So I did take the January 10th weeklies, because one way I trade options is I know that I have to be a lot more patient, even more patient than trading Forex, because the markets do move a lot slower. So that's one thing you have to be okay with. If you're looking to start trading options, you do have to be very patient and really give the trade time to really progress, because it's not a get rich, or it's not a get rich quick scheme. You're not going to get rich overnight, but you do have to allow the trade time to develop and being patient. And you have to be okay taking the trade and stepping away and not looking at it, and just really letting the trade develop and come to you. And if you're confident in your technical analysis and your fundamentals, then you should have no problem doing that. And as long as you're using proper risk management, you shouldn't feel the stress to get out of a trade or check your trade every minute. You're simply just going to rely on the confidence. So that is the biggest thing. Even more important than the technical analysis itself is having that psychology of that, I did everything I needed to do as far as doing the right technical analysis. The rest is, just letting the trade work itself out for you. Now, as far as a target for this, as you can see, I like to target liquidity. We don't necessarily need all these levels in here. You know, I can kind of get rid of all this just so I'm not, these were levels that I used in the past, but I don't want to confuse you guys. So let's just focus on the levels that are pertaining to us at the moment. Like I said, I like to focus. Market likes to, actually, not me, but the market, it's going to capture liquidity, right? It's constantly rebalancing itself and seeking to capture liquidity, because that's what the market maker has to do. For every buyer, there needs to be a seller. For every call, there needs to be a put. So the market has to constantly seek liquidity. And the way it does that is by closing people out of positions and rebalancing the market. And that's why, the market looks the way it does. So with knowing this information, if I were the market, I'd be looking to target this here sell side liquidity, right? So I usually will mark all my sell side liquidities as followed. I'll usually mark them with red. And if I'm marking buy side liquidity, I might mark them with a green, right? Just to keep it very simple. So this would be buy side liquidity up here. This is sell side liquidity here. So if we're here in the market, and if I were to replay it back then, oh, I haven't used bar replay in a while, but anyway, Um, if we were going back, you'd be only seeing this right here, right? The whole right side, we don't see this. All we see is our entry right here at the 143.5 mark. And from there, it's simply a game of patience, right? So if we already know our sell side liquidity is this liquidity here, why? Because, obviously with there being multiple order blocks here, there's a lot of orders here resting just in this here zone, correct? So if there's a lot of orders there, that's where the market's going to be targeting next. So my target would be that sell side liquidity here at 133.35. As you can see, the market did shoot a little past that. But one thing I will tell you guys is once that market reaches my target, Friday the 10th, yeah, I'm out. There's no holding for, the next liquidity point, or getting greedy and, just really trying to milk as much out, because yes, you can make more money holding on to it, but um you're never gonna be profitable that way, trying to basically make squeeze everything out of a trade. Um, One of the only reasons why I am profitable is because I'm okay leaving money on the table. How many times I've had a profitable trade where I got out where I was supposed to, and the market flipped on me right after, and I realized, well, man, if I didn't stick to my trading plan and get out of that trade, I would have lost it and break even, or even lost the trade. And there's also times where I do get out and I could have made a lot more, but that's okay, because I love the fact that the times where I do get out and I see the market reversed on me, it feels a lot better than the times where I got out and the market kept going and I could have made more money. That's greed. Profitable traders are not greedy. So if anything, it's that you're going to get out of this, it's the psychological aspect, because let's be honest, technical analysis is not very hard. I know a lot of people are not, especially, traders are not fond of, trading market inefficiencies and things like that, but it does work. But any skill is really, you could go ahead and make money. You could trade head and shoulders, you could trade support and resistance, whatever. But if you are not paying attention to where you're actually getting out and making money, whether you're taking partials or having trailing stops, using that risk management and having that discipline is what's going to allow you to have this. But probably the hardest part is staying in that trade and not changing, your stance. Because like I said, this is a long time for this trade to develop. Let's see, that is about what, 4 days? No, not really, but about 3 days of waiting, and that is very hard to do. That is a very hard to do, especially the more money that you're putting in to each trade. So if anything, if you really want to make, 60,000, 50,000, $40,000, focus on having $1,000 days first. Focus on having $1,000 weeks, because that's what's going to get you there. Because this is not, we're not trading prop firm money. This is real money. And this is a lot different than trading, a prop firm or fake money, virtual money. This is real money that, you're trading when you're, trading with the big boys, you know what I mean? And different regulated firms. This is your hard-earned money. So it's going to be, that's going to be, make it even more challenging for you to stay in that trade and hold it. But like I said, if you're using the proper risk management and you're confident in a lot of your confluences, that's what's going to give you that edge, and that's what's going to give you that comfort. But really knowing what you're targeting, as you can see, there's the 1 to almost 1 to 4 risk reward trade, which is really good. And we're not doing anything crazy. It's not 1 to 10. It's not 1 to 20, anything like that. I know a lot of people like to, advertise 1 to 20 risk reward trades, but we're not really doing anything crazy. I stick to 1 to 3, maybe sometimes 1 to 2. But on average, maybe a 1 to 3 risk reward trade, which obviously give me that, and it played out in the right way. Um, so yeah, that was Nvidia. I did also take a trade on Apple, and I would like to break that down as well. Very similar to this, very similar approach. The markets, they all been kind of moving the same, but just keep those things in mind. When you are trading regulated, because like I said, these are real funds, these are live funds, and you're not gonna get rich. It's about compounding. If you can, let's say risk $1,000 and make a half 50% of that on the trade, you're good. Don't always be feel like you need to flip an account. The long run is what's going to get you there. Consistently winning. If you take 3 trades in a week, I may only, and that's another thing is, you don't need to trade every day. I don't take a trade every day, and that's what's helped me. If I can only take 2 trades a week, then those are usually my best weeks because that's less time I can lose money, and that's higher risk to reward because I'm letting the trade actually develop. So don't focus on taking 1 trade every day. Focus on taking maybe 2 trades per week, maybe three, possibly, if you're trading multiple pairs. But like I said, you shouldn't be trading a lot of different pairs. You should only be focused on a few and doing those as best as possible. Um, but yeah, like tracking the news, that's something else that you're really going to have to be aware of when you're trading because you might have news releases and things like that. But just make sure that you're really, really not being greedy and really be disciplined. And in the long run, those small wins, they will start to snowball. Those $500 days, we've all been there. Shit, I remember the $100 days. We've all been there, but they will start to develop. And the only way it can really develop is if you don't blow your account and you're using risk management and you're compounding consistently and you're journaling every day, journal every single trade, whether it's a small loss or a big loss, whether it's a big win or a big loss or a small win. Make sure that you're journaling every single thing. That's how you get better. That's how you realize where you're making mistakes. Um, but other than that, I hope you guys enjoyed the video. And I'd love for you guys to watch me trade live. I am trading live in my Discord. Um, I really want to, just help people, whether that might be mentorship or even, just taking the same trades as me side by side. I will put my link here in the description. So if you guys want to go ahead and go ahead and join the Discord, I'd love to trade with you guys. And make sure you guys also subscribe to my trading channel because I will be making more videos here in the future. Some on stocks, some on Forex, a little bit of both. But yeah, I hope you guys enjoyed it and take care.